So we are doing Feb-March 2022, paper 22. Are you with me?
Yes, sir.
Okay. When you have a glance at this sum from far, what sum do you think is this?
Absorption,
Absorption costing. When you talk about absorption costing, what are the things that you think will come in your paper?
that apportionment,
So here there is
then
apportionment, reapportionment, and what? Then what will
then
it be?
maybe option
Ending
one,
your
option
OAR,
two.
under
Yeah,
absorbed, over
absorb, over
absorbed,
absorb.
and option 1, option 2, or option
Hmm.
A, option B, or
Yeah.
the quoted selling price. This is the thing that will come.
Hmm.
Okay. Now over
Yeah.
here, I'll go directly to the question.
Hmm.
I've been given depreciation of machinery and production department supervisors' wages. And what is this that is given to me?
This is the basis at which you're supposed to apportion your
Okay, fine.
thing.
This is the basis at which you have to apportion. Now, can you read this?
Yeah, the canteen provides meals for staff in the machining, assembly, and support
So,
departments.
canteen department is providing services to all the three departments.
Hmm.
If your canteen department is providing services to all the three departments, that means this
Yeah.
will be reapportioned first.
Okay.
And support staff is going to be reapportioned on the
The
basis of
support.
production department machinery costs.
Hmm.
Okay, fine. Machinery cost is this.
Yeah.
Okay, production department machinery cost. This is the reapportionment of which department? Support department. Are you with me?
Hmm. Yes, yes.
Come on. Now, what is this over here?
It's the overheads that are already absorbed, apportioned.
Overhead that is already absorbed. What is this over here?
That's depreciation of machinery. So we're supposed to,
Depreciation of machinery will be distributed amongst the.
four departments.
Okay. Is all the four department using machinery?
Yes,
Okay. And what basis will it be distributed?
machinery cost.
Okay, fine. So can you give me the distribution? What is the depreciation?
Okay, so it's 21,250 for machining.
25,000 is the depreciation.
No, 21,250.
Depreciation is how much?
Oh, depreciation, 25,000.
Depreciation is 25,000. It will be
Yeah,
distributed amongst the four departments in what ratio?
it will be 850,000 upon 1 million.
110. So I will just add this, right?
Yeah,
850, 110, 15, and 25. Yeah. What is the total?
it's 850, 110. The total is 1,000.
1,000. Okay. So 25,000 into 850 by 1,000
1,000, yeah.
into 110 by 1,000 into
Hmm.
15 by 1,000 and into 25 by 1,000.
Yeah.
So come on, give me the cost.
21,250
Hmm.
to 2,750,
Hmm.
375,
Hmm.
625.
Lovely. Now production department supervisors wages.
Yeah.
Supervisors wages will be distributed amongst.
It'll be according to number of employees
Okay. Now
and
can you
it'll be for all.
see what is this?
What? I can't see what you underline.
What is this?
Oh, that is production department supervisor's wages.
What does this mean?
That is only going to be a portion to production department.
Yes, it is only going to be a portion to production department. In what ratio?
Um, seven. Are you only going to do 75 and 35?
Yeah, it's only for production department, correct?
Okay, yeah. So it's going to be um 110 is the total.
Hmm.
So it'll be 19,800 into 75 upon 110,
Yeah.
which will be 13,500.
Hmm.
Then the second one is going to be 6,300.
Into 35 by 110. So this one is how much?
6,300.
So when I total all of this, it will come how much?
Wait, one sec. First one is one second. Yeah, 1,41,100. Second one is
You will just add this up.
yeah,
Okay. Now
yeah.
reapportion what?
Now we have to reapportion the canteen.
Okay. Between
Hmm. Canteen you'll do between machining, assembly, and support.
and
And what's the
what basis?
what basis you will do it according to floor area?
Hmm? Canteen works on floor area.
I no actually power.
Canteen works on power.
I don't know what canteen works according to.
Check.
Wait.
Canteen will distribute on what basis? Canteen gives food, right?
Yes.
Food has to be distributed on the basis of employees.
Oh, okay, yeah.
Yeah. So it's going to give
Yeah.
food to these three people.
Hmm.
So divide by what?
It will be 75 plus
118.
30 plus 8. Yeah, 118.
So first is canteen is getting reapportioned. So I will put a bracket 14,495 for canteen.
Yes.
So this will be multiplied by 75 over 118.
14.
35 over 118. And this will be 8 over 118.
You did 14,495 into 75 upon 118, no?
Yeah.
Okay. So the first one is 19,230.
Hmm.
Second one is 4,299.
Okay.
Then third one
What is
is
this?
983.
9213 4299 983. If the answer is coming in points, be mindful that the total comes up to the same thing.
Hmm.
Then you will do the totaling.
Yeah.
This will become dash. This will be 150313.
Yeah. One five
Second
zero
one
three one three.
41,949. Third 8538. Now I'm going to reapportion support. So support will be 8538 dash. Support is just reapportioned on the basis of
Production department machinery cost.
so 850 plus 110. So it's
50 plus
960.
yeah.
Come on,
So
tell me reapportion.
850 upon 960 into 8 8538, which is going to be 7,560.
This is 978. We're done with reapportionment because apportion was already done for us.
Hmm.
This is what your
These are the overheads.
budgeted overheads.
Yeah.
Next question will definitely be what?
OAR,
So budgeted overheads divided by
budgeted activity level.
budgeted overheads divided by
Budgeted
Budgeted
activity
activity
level.
level. How do you get the budgeted activity level?
You'll see whatever the higher working hours are, and then according to that you'll do it.
Okay, fine.
So for machining, it's going to be machine hours 5,600.
Hmm.
So will be 28.19 per
Machine
machine
hours.
hour.
Okay. Assembly, labor
One sec.
hours.
Yeah,
This
assembly
will be
labor.
157,873 divided by 5,600 machine hours
Will
and
be
40.
17.889.
You will always take up to how many decimal places?
Two decimal places.
So can you tell me what will you write?
17.89
Per machine hour.
per labor hour.
Writing is mandatory, okay?
Yes, sir.
$17.89 per direct labor hour.
Hmm.
State two reasons why your overheads are under absorbed.
Under absorption is when you recover less. So
Production was
production is less
lower
than
than
what you
forecast
estimated.
and
Yeah, and your overheads will be more than whatever you
overheads
recovered.
recovered is less than actual
Your estimated
overheads incurred. Overheads recovered is less than the
actual overhead incurred.
overheads recovered. This is
Yeah.
actual overheads. Is less than the budgeted overheads.
Okay.
Come on. The most dirty part of the question. It's not
What?
dirty, it's
Okay.
just a bit complicated.
It's lengthy, that's why.
Yeah. Come on, can you read this for me?
Hmm. Okay. Wait. One sec. Yeah. So at another factory, a single product is made. This factory uses marginal costing, and
Hmm.
they've given the details. Then the factory has been operating at below its normal capacity. However, recently demand for company's product has increased considerably. The directors believe there is an opportunity to increase profits. They're considering two options to meet the increased demand.
Okay, fine.
So
What do they want from you basically? Monthly
they
profit.
want you to create the profit, yeah.
They want from you monthly profits.
Hmm.
Okay. Which system are they using?
They are marginal,
Marginal costing they are using. Now increase the selling price by 5%. So this will become into how much?
105.
So this will become how much?
Into 105%, it's going to become 28.35.
28.35.
35.
Increase production to 16,000 units.
Increase
Overtime
production
is
to
paid at additional. What is the actual production?
4.10. Actual production is 15,000 units.
And you're going to make it to 16,000.
16,000.
And overtime
So
is paid at.
4.10 per unit. So into
So
1,000 units.
overtime it will be how much? 1000 into 4.10.
4.10. So it will be 4,100. This will come as fixed cost, right?
Overtime is for what? Labor, right?
Yeah. Oh, so it will come under variable only.
And reduce monthly advertisement by.
2,000.
So
So
monthly advertisement is which costs?
fixed cost. So 44,000 minus 2,000 will be 42,000.
Okay, so you're going to make marginal costing income statement because there is overtime. So I will make it for two separately. For
Hmm.
15,000 units, I will make separately. For 1,000, I will make separately. And I will write total.
Okay. So you'll
Okay.
start with the selling price, which is going to be 28.35
Sales, selling price,
minus the direct labor 10 and 10.1 and direct materials 8.8. So it'll be
direct labor is how much?
going to direct labor
10.10,
10.10, yeah. So the total is $9.45 per
and here
unit.
it will be 14.10, na?
Achha, okay, wait, I didn't calculate that yet. Yeah,
And
that will be
4,000.
14.10, yeah.
Then
Now the totals will be 9.45 for 15,000 units.
how much?
9.45.
Hmm.
And for the other one, it's going to be, one second. You'll take 28.35 only, na, as the selling price.
Yeah.
Okay. So it's going to be 5.45.
Okay. Multiply it with the units.
Okay. So it's going to be 5,450, and
Are you sure?
for the second one, not for this one. It's going to be 141,750.
141.
750.
And the other one?
Uh, 5,450. So
Total
total one lakh 47,200.
100.
100. Okay, I must have done some mistake.
Check.
141,750 plus.
Something up you missed out.
Yeah, must have been that only.
It's 28.35 minus 8.80 minus 10.10. This is 4.45.
What is 4.45? Achha, that is 4.45.
How?
It can't be.
28.35 minus 18.90.
Hmm.
It's 9.45.
Yeah.
And what is
So
this one?
9.45 only I got. That
28.35
0.35 minus
is
8.8.
8.80
Oh, Miss, we didn't minus the overtime, na?
minus 4. This is 5.35. So 5350. Are you with
Because,
me?
wait one sec, what did you do?
I just calculated what you made me write.
Acha, again I'm getting the wrong answer only.
Check. Please, I'm waiting.
28, 28.35 minus 8.8 minus 14 point, oh, it's 14.20.
Hmm?
It's 14.2010.
Hmm.
Acha, okay. Got it. That's where I went wrong. So it's going to be 5.35.
Hmm?
It's going to be 5.35. I got it. 5350 plus 141,750. It's 147,100.
Okay. So this is your total contribution
Hmm.
minus the fixed cost.
42,000. So it'll be 1,05,100.
So your profit is how much? 1,05,100.
Hmm.
Now which option we'll take?
Option 2.
Option 2. What is the things under option 2?
It is increase production capacity by 15% by purchasing additional machinery costing 78,000. This
One minute,
machinery will be
one minute. So,
sorry.
so increase
Yeah.
the production capacity by 15%.
So
This will be
15,000 units into 115% will
hmm,
be 17,250 units.
how much?
17,250.
Okay. Then
Then additional machinery costing 78,000. This machinery will be depreciated 20% per annum. So
what will this give you?
78,000 into 20% divided by 12. So it'll be 1,300 per month fixed cost.
Okay.
And selling price will remain the same. The supplier of materials currently offers a trade discount of 20%. This will increase to 30%.
So
So,
he was currently getting 20%.
yes.
So now this will increase to how much? 30%.
Hmm.
So what will be your material price? So
Mm,
8.80 is 80%, right?
yeah,
So how much will be
100,
70%?
70%
8.80
into
into 70 divided
70%
by 80.
divided by 80%.
So this
Going
is
to be 7.7.
7.70.
Hmm.
Anything else?
It's going to be 7.7.
That's it.
Let's see.
So selling
Yeah,
price is how much?
selling price is
27
27,
minus variable costs, that is
which is
7.70 and
and 10 power.
10.10. So this is 17.80. Yes.
Yes, 17.80 into 17,250. So it is
What is contribution?
17 point. Oh, you took the total. I thought that was a contribution.
Why you think you're not doing it?
7.7 minus 10.10. 9.2.
Units is,
9.2 and units are 17,250.
so it will become how much?
1,58,700.
This is,
This will be the contribution. I minus the fixed cost of 44,000 and 1,300 also.
what is profit?
1 lakh,
One one
113400. Yeah.
Okay, so you have profit as per option 1 and you have profit as per option 2.
Hmm.
Am I correct?
Yes.
Okay, fine. So profit as per option 1 is how much?
Profit as for option 1 is 1,05,100.
Okay, and profit as per option 2 is 113,000.
113,400.
Now, cost of additional machinery is required in option 2 would be financed by issue of ordinary shares.
Hmm.
Advise the directors which option they should choose. Financial factors, non-financial factors.
So for the first one, option 1, equal financial factors will be that it's creating a lesser profit.
Okay. For option 2,
And
you require more machinery.
yeah.
Okay, and option 1, less. So financial factors would be you will get more profit
Hmm.
because of more production.
Hmm.
For
And
option 2,
then,
you're buying a new machinery, right?
yeah, and
And because the issue is with ordinary shares,
it's a permanent source of finance.
it's a permanent source of finance.
Yeah, and no interest is required.
Okay. ये financial factors हो गया. 5 marks हो
Yeah,
गए. 2 points.
okay. For
Non-financial
non-financial,
factors.
you will say
You're
for
going to
option
buy
2, na?
machinery, right? So you have to
Yeah,
train staff.
yeah,
And because there is no overtime, so workers will not be so much motivated.
yeah.
And it is higher selling price compared to option 1.
Hmm.
So which option they should choose?
Option 2,
Because it's giving more profit,
more profit,
more
and
fixed
it has a
costs,
higher
additional machinery,
contribution.
and higher contribution. Very good. Two advantages of budgetary control.
Budgetly, what is that? I don't remember.
Budgetary control is when you set goals in advance.
So the You can
So
see how
workers
much.
will be motivated.
Yeah, and your expenses will be controlled.
My expenses will be controlled. Budgetary control is expensive, right?
Acha, budgetary control. I thought that it means that
Yes,
you're setting a
you
budget.
just set the budgets.
Oh, okay.
Okay. And because you have set the goals, there is clear aims, there is a clear definition of the work and in how much it should be done. So it
Hmm.
facilitates responsible accounting because you know who is responsible for what.
Yeah.
Facilitates responsible accounting. Limitation.
Hmm. Limitation will be that it's expensive.
Expensive, time consuming, discourages innovation because you have to work
Go
within
by the
budget,
budget.
discourages innovation. If
Hmm.
budget planning is poor, so it can act demotivating.
Hmm.
That's it. So with this, we complete Feb March 2022, paper 22, question number 4, which is based on absorption costing. Okay.
Hmm.